Hello. In this video, I'm going to use the modulus analyzer to actually build a strategy and figure out a combination using it in real time. Now, for the purposes of this video, I'm just going to see what I can come up with. There is not going to be any rhyme or reason, and I'm going to walk through the process of how I'm picking each step and coin. I honestly don't know what's going to come of this or how it's going to work out. But I do know that in the end, you'll be able to see with perfect clarity how the analyzer actually works in building, tuning, and tweaking your strategy. So let's start with, I'm on an empty chart. I'm using Binance US as my base exchange. So one of these coins is going to be my choice. I figured out I want to use 10 positions of $11 for a budget of $111. I don't want to go above that. That's all I want to use. The question becomes is, do I want a surgical strategy or do I want a more aggressive scalping strategy? I don't know, to be honest. First, let's figure out the coin to start with. Now, the coin that I actually start with may not necessarily be the coin I end up with. One of the thinking processes that you have to keep in mind and consideration is that when you start looking at strategies, you may come up with the perfect strategy, but apply it to the wrong coin. So I'm going to go with ONT. It's not a coin I work with commonly, so I have no idea what its market is like. Let's start with by loading the analyzer. Short and sweet. For now, I'm going to minimize it. There it is, nothing bright. I do know I will be using dollar cost averaging at some point. So let's turn off shorts. I also want it applicable to my budget. So let's start with the base currency of USD, $11 position to start with. And my exchange rates are 0.1% per transaction. I want real-time data. And now I set this to USD as well. So this sets everything up on the basis of a very simple budget. Now let's double check everything here. Okay, everything looks the way it should. Click OK. So, from experience, I know momentum will break this. Been there, done that, I've seen it enough times. But I want to use a poor man's Mesa or a sine-weighted moving average. I want to start there because it does reasonably well. Okay, next step is to shrink this. We don't need to see the analyzer window because it will be in the bottom as we work. So let's turn off the signal line, turn on the chart, and let's see what we can come up with. Let's start with the sine wave moving average. Well, that'll be a 37 rule that we'll use. That we'll use SWMA as the first moving average. Nothing else changes. Here's what it looks like. Now let's open this up and let's tune and program the analyzer to the moving average signal line. Let's see how it looks. Not good. Quite frankly, it's a mess. So let's I'm going to bring this over here so I can see this. Let's scroll it down. Let's shorten this to 31. And let's put a signal deviation of 1. And it's only getting worse here. Okay, the signal deviation made a big difference. Let's move this down to 23 though. Alright, so 31 is better. So let's go back up to 37. Remember, we're at the 5-minute chart, so we're looking at 17 days of data. So we want to be sure that for that 17 days, we get a good amount of trades. All right, so let's go to, let's try 73. Let's try a longer range. All right, that's too high, so let's go to 55. Basically, I am using this number here. But the thing of it is this is something that I can't ignore. 95% success rate. It doesn't do very much for trades. But I can't ignore that. That's something that's going to be hard to get by. That's pretty good. In fact, that's actually one of my highest, and I haven't even added dollar cost averaging into this yet. So that's going to be something to really be concerned about. Realistically speaking, I could trade just on this. One and only one setting. But it's only going to bring $7 in 17 days at my current profit. So I'm going to have to actually invest more money if I want this to pay for itself. I'm looking to break even here. Every month I have to cover $100. So one coin, 17 days, $65. So a little over a month, this could break even. That's a reasonable expectation. But let's try to get these numbers on a shorter term schedule. So let's go to a shorter term number. Let's hone it down. We're at $7. Let's go to 34. Let's try to find a balance between too short and too long. Well, 34 gives us a little more money. So let's go to $7.95, 37. So 37 gives us $9. Let's do 27. Let's see if we can get this above $10. Maybe even up to 15. Nope, 27 doesn't work. 29. And so. So it looks like our number has to be in the 30s. So let's try 39. Okay, it's going down. Let's go to the extreme and go 13. Let's see what happens if we go real far down. Well, it makes a lot of trades, but it doesn't do well monetarily. So let's slowly go back up. It's getting worse. So it definitely looks like we have to be in the 30s. And it looks like, oops, not what we want. It looks like 37 is a high number. $9.97. Okay, more trades, less profit. Now, as you can see, there is no science here. None whatsoever. I'm just playing with numbers and actually just watching how the analyzer returns the values. So we found the highest number, $90.97. Now let's see what happens if we add a momentum. Okay, standard momentum is going to be high-low. Pretty straightforward, no brainer there. Let's go with the double EMA for the high-low. Let's see how well this works. And we'll make this a momentum line. Now, right now, momentum is the same. Well, actually, let's set momentum to 24 hours. So on the 5-minute candlestick, that's 288. 288 times 5 is 24 hours. 997, we're still there, doing pretty well. All right, let's go with the simple EMA. Let's see how well momentum handles that. Okay. Let's cut it down and see if momentum of a smaller value produces any better results. Because as it stands, oh, I know what I did. I forgot to turn something on. I forgot to turn on confirmation bias. Now it will actually evaluate momentum. Getting ahead of myself here and putting the cart before the horse. Alright, so now we're going down. Let's make this Classic 89. $9.67. Let's go up to the 24-hour and see if we can really bring this out. Okay, that takes it down quite a bit. So let's try a 73. We also went down here, which is not good. We want this as high as possible. That's better. It's a little bit of a hit. Less trades, but the profit is close to what we want. So that's a reasonable process. But let's try... let's try a momentum of 55. That went down pretty poorly. So, let's try a 67. Somewhere between 55 and 73. 952. All right, let's go back to 73. All right, so 67 is actually better. So let's go to 65. Whoa, we broke 10. This is what I wanted. We broke 10 and we got 100% success rate. Now, obviously, there's going to be questionability about this. Realistically, that's a bit of a paradox to be aware of. That's not necessarily true. But we're only making 14 trades. I wanted short term and ended up with long term. But that is definitely something I really can't ignore. 642 bars per trade. Let's see what this actually looks like. It's actually pretty good. Now, would I trust these values 100%? No, I would not. But I would definitely take this to a paper trader and actually test it to see if it performs as well as these numbers show. This is pretty nice, actually. I actually don't know if I can improve this any. So here I've set up with I wanted a short term, I ended up with a long term. I'm only doing 14 trades in a 17-day period. So what happens if I take this up to $100 positions? Let's get back in here and actually try to change this. So $100 positions. Maybe it's worth rethinking what I wanted to go with. This actually breaks even. Pretty much, if I do 2 coins, I could do a very nice job. So let's count signals. How many signals between buys and sells? Well, 1, 2. Okay, so we have a buy signal, sell signal. We have a 2 buys and a sell. So this would be $200 position. Okay, this looks like a $100 position. A $100 position. $100 position. So it looks almost a 1-to-1 ratio. So there's $1 to $200. So far $200 is the highest we've gone. So if we have a $500 budget, we could actually take it up to a $200 position just on this one setting. So that's not bad. Not bad at all. Now, let's do a reduction phase. Let's add dollar cost averaging. Though we don't need to add dollar cost averaging. Let's face it, this is pretty good the way it is. But let's see if dollar cost averaging will actually give us a good reduction. I want a minimum of 1.5 and I want no more than 11. Now let's raise the strategy tester and let's hook it to the dollar cost averaging module. $94.14, $91.13. It actually did worse, but it still gives 100% success rate. Alright, so let's go back to the original one, the moving averages. Now by doing this, we are not evaluating dollar cost averaging in a chain, only the moving averages. And let's go up to the next time scale or time frame. Alright, we see here it doesn't do so well. It actually does very poorly. So now if we add dollar cost averaging in, we're going to get a different set of numbers. So something to think about is, even though dollar cost averaging does take a little off the profit, there's a big risk that this by itself can go horribly bad. Let's go to the area that we'll see Black Friday. And lo and behold, by itself, there's a lot of exit breakers in here apparently. There's a lot of exit points. Let's see what happens without anything else. It's just as bad. So as you can see, even with dollar cost averaging, my budget is too restrictive. Things to always try and look at. If you stay within a smaller time frame, your budget is going to work well for this coin. But if you try to go to a larger time frame, it's going to sink your budget. Whoa, look at this one. 42 on the 1 minute. Now 1 minute means 1,440 candlesticks. That's roughly 5 days. $42 in 5 days is better the $91 or $97 in 17 days? Or is it? Well, 42, 40, 80, 120 for 15 days. So here you get more profit using a shorter time frame. But what happens if you use just a strategy by itself? Just the moving averages. You don't get anywhere near as much. So it's clear that while the market does well under certain conditions, with just this combination by itself, it can change quickly and you can end up in a bad situation. It's also clear that using this time frame gives me better opportunities, and it's using more abilities. So for a 15-day period, $150, this one coin has just made my break-even point. And I'm only using $100 positions. Now, if I have a budget of $500, I could do 2 coins, stay comfortable, and get $300 a month. But let's go down to 11. Let's really see. $4.59. That's not so good. So smaller budgets may not fare as well. Let's go back up to here. Go back to the 5-minute, $9.73 in 17 days. It gives me $100 budgets. 5 coins are not breaking even. I'm looking for 100. So you have to look at your budget versus your strategy. This isn't working. So this isn't working. Let's unlink it, and we need to get out of it. Find another approach. Because this is failing miserably. Doesn't work. So now we're back to the strategy analyzer. Let's try again. Oh, let's go with... I've heard people say that stochastic and RSI work well together. Let's see. We have the stochastic. Let's turn on the chart. Let's go over, turn off the signal line. Let's load an RSI. Here we go. Let's shrink this for now. Okay, only one signal here, 80-20. And what gives with the RSI? All right, terrific. It loaded twice. We don't want twice. We only want once. Okay, turn off the signal line. Oh, show chart. Okay. There we go. Now let's do a little bit of tuning. We'll actually, let's have the RSI pull in the stochastic. Let's see how this actually looks. There we go. RSI is pulling in the stochastic. Okay, it looks like we need to put RSI in an aggressive state. Okay, let's go to traditional. And let's see what it shows. Okay, it picked up this sell point there. Now let's raise this. And let's attach this to the RSI. And let's make sure we're at $11. Okay, let's go down to the 5-minute time frame. And this isn't doing very well at all. 70% success rate. Not very good. So let's bring in dollar cost averaging. And let's set it for strategy mode. And let's filter out the weak signals. So we'll pull in the RSI line. Strategy. 1.5%. And 11 for a budget. Now let's pull in the dollar cost averaging line and see how well it does. Not bad. It doesn't do a lot, but for just really looking at this, it does better than I expected. I really didn't expect this to do as well as it did. It actually turned out to be a pretty long holding strategy. That surprises me. Only 9 trades. So let's see if we can tune stochastic a little bit to give it more trades. Okay, 14, 3, overbought, oversold. Let's go down a little bit and see if we can make this a little more aggressive. And let's go to traditional. Okay, that's much better. But we have an exit point right here. But still $19. Not bad. Let's see if... What happens if I bump the budget? What if I'm willing to put $200 in? Well, that actually did well. 17 days, I made $28. That's reasonable. $200 for the coin, though. That could be problematic. In order to break even with an overhead of $100, I need 5 coins. But if I have 5 coins at $200 each, $1,200 budget, I could break even and actually have a little bit of profit overhead. So this is not too shabby. So it's something to think about, something to be concerned with, and something to focus on. Don't become fixated. Even for a 5-day period, let's see, 13 times 6, that's not too shabby either. So 13 is 26. 26 and 26 is 52. So that could actually, $52 every 4 cycles. That could work. So this definitely could be profitable as well. So don't become fixated. Use the analyzer to help you find the most profitable positions. Until next time.